Welcome back. You're watching Market Fatafat on ET now, and let's bring on board Sameet Chavan now to talk more on the technical front. A very good afternoon to you, Sameet. And Sameet, starting with you then, Max Financial Services, how is this one actually looking on the charts to you? Do you think that this one will be able to actually surpass those previous targets that were set?
Good afternoon. Yes, it seems that the stock is in a strong uptrend. If you see, it's a movement in last couple of months. The stock has been maintaining a sturdy structure. A series of high rise, high lows can be witnessed. And since morning, we are seeing good traction in this counter. The way the stock has managed to clock its 52-week high, it seems that the stock is now likely to challenge its previous highs. So that are around 1100, 1150. So overall, the bias remains positive from here on. Will not be surprised to see this stock challenging its previous highs.
Okay, surely keeping an eye out over there for Max Financials. Let's move on, talk about Persistent Systems. This IT company reported their number as well. When you're looking at it overall, for the quarter gone by, that's Q4, there was no slowdown for Persistent in terms of growth. Another quarter of 3% quarter-on-quarter basis growth that they've seen. A slight miss on the margin front, but Europe contracts is something that we are keeping an eye out on. The TCV deal wins and the headcounts have remained quite steady. Overall, in terms of numbers, dollar revenue saw a growth of 3.4%. CC terms, revenue growth was at around 3.4%. Estimate was 3.5%. So slightly, obviously, in line is what we could say. India revenue, a growth of around 4% on a quarter-on-quarter basis, and profits also saw a jump of around 10.2%. Management is saying that they will continue to push the boundaries to new scale and new heights, and they are surely keeping an eye out in terms of the investments, strategic investments, and disruptive technologies in the world of AI. So yes, let's keep an eye on Persistent System. Subduedness is what we're seeing, even though the numbers are not that bad.
All right, that's Persistent down about 9%. Let's talk about Aditya Birla Fashion, and that particular counter was gaining about 3%. Last time I checked the stock, now holding on to gains about 4% or so. They've said that the board has approved the spin-off of Madura Fashion and Lifestyle into a listed entity. They're planning about 2,500 crore rupees equity raise within the 12 months of split. And yes, we had this particular detail coming earlier, but the fact that they're going to also list the counter or the company on bourses post the demerger is a new significant development. On the back of that, the stock is seeing an uptick of about 4%.
Okay, let's move on to the next one. And Ansh, All Cargo Gati, that's the stock you're picking out for us. A monthly update that we're seeing?
Yes, that's right. And also the stock is up around 2.5% in trade. Yes, on the back of monthly business update for the month of March. So the total volume including Surface and Air Express stood at 111 KT, which is at a 5-month high, recording an increase of around 3% as compared to March 2023. In comparison to Feb 2024, volumes has increased by around 7%. The 3% growth in the monthly volume over the same month last year is on the high base. This is the testament of companies' thrust to improve its volume growth and overall performance. Also, if we see the chart, the stock seems to have given a good breakout from its downward sloping resistance trend line.
All right, let's move on. Ankita, let's talk about Biocor. And why is this one in focus today?
Biocor is in focus today because it has received approval from the South African Health Regulatory for its drug tacrolimus. Now, the tacrolimus drug will be sold in the form of a capsule of 0.5 mg, 1 mg and 5 mg strengths in South Africa. And this is company's first approval in this country. Now, tacrolimus is a calcineurin inhibitor. It is an immunosuppressant used in the treatment of organ transplant patients, which reduces the body's ability to reject a transplanted organ. Now, it has been particularly effective in treating patients for renal transplant for more than 2 decades. And on the back of this news flow, Biocor is trading with gains of more than 3% in trade today.
Okay, surely keeping an eye out on Biocor. Let's move on and talk about Raymond then. Sameet, Raymond today is buzzing in trade. Last 1 month, last 6 months also, we have seen a good uptick coming for the stock. At current levels, what is the view and what is the target that one should keep for Raymond?
See, we are quite upbeat on this particular counter. In last month or so, this stock has already, recovered fair bit of ground from 1600. It has managed to clock nearly, 20-25% gains in such a short span. And, considering the overall momentum on Friday, we've already seen a decent price and volume breakout happening in this counter. Stock has come out of its recent, slumber phase, and from here on, will not be surprised to see the stock even heading towards 2150 or beyond 2200 as well. So any dip from current level would be a good buying opportunity. And if you need see, the support levels, the previous base was around 1600 and 700. It has now moved higher from 700 to 1850, 1900. So overall, the bias seems positive, and considering the overall price and volume activity, this stock is poised for a good.
Surely keeping an eye out on Raymond and those levels there. Let's move on, talk about GSPL. This is a stock that has been in focus today and a sharp fall that we saw in the stock price as well. Why is that so? Look at it, it was locked in lower circuit, just managed to open right now, but down 17-18% even as of now. Now, what has happened is the high pressure grid tariff is reviewed by the PNGRB. The tariff reviewed after a gap of 6 years this time, and the tariff cut by 47%. That is around rupees 18.1 MMBTU. This is going to be with effect from the 1st of April. And overall, what is the thing that earlier the tariffs were, which was at a price of around rupees 34, and GSPL had asked for a tariff of around rupees 50.77 approximately. But what this actually accounts for, lower tariff is an account of the lower future capex, that accounts for lower opex, that is both in terms of existing pipelines that are there as well as in terms of new pipelines. So that is a problem that comes in terms of operational expenses, as well as higher utilization at around 87% levels compared to 75%, which is normalization. So yes, because of this, we're seeing some pressure that has come in on GSPL today. And when brokerages overall have, when I'm looking at 5-6 of these brokerages, they all have cut the target price, post this as well. So it's something interesting that one should keep an eye out on.
All right, that is GSPL that is under pressure in trade today, but there's one stock that saw a huge jump, actually most in about 9 months or so, was Sterling and Wilson. There you go, 10% uptick coming in for that one, and the reason being that the company has actually reported a profit as against loss last year in the quarter gone by. So their revenue saw an uptick, actually it's a spectacular uptick. So the revenue came in at around 1,178 crore rupees, and this is as against just 88 crore rupees a year ago. They posted a profit of about 10.4 crore rupees as against a loss of around 421 odd crore rupees a year ago. So on back of stellar set of numbers, a good rebound, a good turnaround in the business. You can see Sterling and Wilson's doing wonders on the charts as well today.
Absolutely. But let's move on, talk about HDFC AMC then, Ansh. And why is this one in focus? Is this also an earnings candidate?
That's right. The company has reported revenue at 695 crore as compared to 671 crore, which is up by around 3.6% on quarter-on-quarter basis. Also, their profit is up by around 10.8% from 488 crore to 541 crore on a quarter basis. Also, EBITDA here we are seeing an improvement of 5.8%. Also, the margin has gone up from 75.9% to 77.5% and up of 160 basis point. So why the stock is in red now? We have a brokerage note from Morgan Stanley, and they have maintained an equal weight rating given on the back of the high valuation of the stock, and they have also trimmed the target price from 3,440 to 3,325, which is just 10 to 11% below the current market price. They have also said that the operating profit was below as revenue is contracted sharply, particularly partially due to one-off. So for those reasons, the stock is in focus.
Okay, yes, keeping an eye on that. But let's pull up the charts for Tata Consumer. They're set to report their numbers tomorrow, the first FMCG company. And overall, what we're expecting is, the food beverages business side on overall FMCG pack is expected to do better than the HPC. That's the personal care segments. So yes, because of that, Tata Consumer is expected to be on the better side of the numbers that we'll be seeing. The rural continues to be under pressure, but they don't have too much of an exposure there. Revenue growth of around 9% is what one could expect in terms of the margins, and expansion of 100 basis points. We're seeing this inflation that was there in the tea prices for them, that has come down. So because of that, margins are continuing to see an expansion. But commentary is going to be key, because in this last 1 month, we've seen an increase coming in most of these tea, coffee prices. So how that shapes up is something to watch out for. Other than that, the acquisitions they made, Capital Food as well as Organic Food, how that is going to be coming in. Capital Food, we may start seeing those numbers pouring in Q4, but Organic Food may be next quarter, but we'll ask them the update on acquisition as well. And other than that, food business, double-digit growth, beverage business, high single-digit growth is what one could expect. So yes, interesting one to watch out for. International business expected to see an improvement as well sequentially.
All right, that's Tata Consumer for you. But Sameet, how is Tata Consumer looking on the charts? No doubt ahead of earnings, the stock is looking very good, at least in today's performance. But over the last 6 months, given gains of only 31%.
Yes, around mid-March, the stock topped out around 1270 and then underwent some sort of price correction, which was then followed by some time-wise consolidation around its key moving average of 89 exponential moving average, least around 1100. So after spending nearly 3 weeks around that important sacrosanct support, stock seems to have formed a strong base around it, and within the FMCG space, if you see, this has been one of the outperforming stocks. So overall, the stock has it seems that the stock has completed its price-wise correction, and now the kind of price and volume activity that we have been witnessing since morning, it appears that the stock is now likely to come out of the recent consolidation phase as well. So from here on, the immediate levels to watch out for is around 1200, and once the stock surpasses 1200, we could see even heading towards its recent highs of 1250, 1270. So the bias remains positive, and now 1100 has become a very strong support for this product count.
Okay, surely keeping an eye on Tata Consumers and the levels there. But on that note, let's just dip into a very short break. Don't go anywhere. We'll be back with more stocks after the break.
Welcome back. You're watching Market Fatafat on ET now. Let's talk about Bosch Sameet, a stock that is actually steeply priced. But how is it looking on the charts to you? Attractive player that one can look at?
See, overall, the chart structure looks quite promising. As far as Bosch is concerned, the stock has already rallied quite a lot in last many months now. If you see its recent price action, stock has been consolidating with some sort of negative bias from the levels of 21,000. And today it has managed to give a decent breakdown from its important support of 29,200. So if this particular stock managed to slide and closes below 29,200, that would confirm a bearish pattern which resembles a inverted flag, and the implication of this particular pattern would be seen over the next 3 to 4 trades, and the stock can slide towards say 28,500, 20,000 over the next 2 to 3 trades. So overall, it seems that for a time being, the stock has slipped into a consolidation mode with some negative bias, at higher levels. So 30,000, 30,500 could act as a very strong resistance for this particular round.
Okay, keep an eye out on those levels for Bosch. Let's move on. Talk about landmark cars, Ankita. Why is this one in focus? I believe they've signed some pact.
That's absolutely correct, Vinny. They've signed a pact. In fact, the stock, we saw an uptick of a percent coming into the early morning trade, but it seems to have given up all those gains and is succumbed to selling pressure and is now trading with a downtick of 0.9%. But Landmark Cars, the company has signed a letter of intent with Mahindra & Mahindra for opening 3 showrooms and 4 workshops in Hyderabad. Now, these outlets will be established in one of the wholly owned subsidiaries of Landmark Cars, namely Landmark Mobility Private Limited. Landmark Cars has already had 3 Mahindra & Mahindra outlets in West Bengal earlier on. Now, this strategic initiative underscores Landmark's commitment to solidifying its presence in the vibrant Hyderabad market also. Mahindra & Mahindra will be the 3rd dealership for Landmark Cars in Hyderabad after Mercedes-Benz and Kia, and this is in line with the company's strategy of horizontal expansion with fast-growing premium brands and vertical expansion by keeping deep into an unidentified geography. And on the back of that, Landmarks is in focus today.
All right, let's talk about NTPC Sameet. How is NTPC actually looking on the charts to you, given the fact that this one has also been a major beneficiary of the run-up that we've seen in all of these power counters? 48% uptick in the last 6 months, more to go?
Yes, but at least in the short term, we expect some consolidation in this counter. Stock recently clocked a high somewhere around 375 odd levels. But the kind of profit that we have witnessed in the last 3-4 sessions, it seems that at least for a time being, we would see this stock oscillating within a range. So the broader range would be 360, 375 on the higher side, and lower side, whenever the stock would come around 330 or 320, it is likely to attract some sort of buying interest. So for a time being, the stock has slipped into a consolidation mode. So the ideal strategy for the momentum traders would be to buy as close as possible to the support level and try to book profits around its important resistance levels.
Okay, let's move on to the next stock from the pharma pack that we have is Lupin. That's one we're keeping an eye out on. The company's actually launched a tablet which is used for the treatment of overreactive bladder, and this is called Mirabegron, which is used for this treatment. Now, overall, this is a generic drug. They have a big opportunity in the US market, and this launch is coming in the US for the company. And on the back of that, we've seen that some brokerages have also come out with a report. Now, we're seeing that Antic believes that Lupin is actually has a joint FTF status for with 180 days exclusivity in the product along with Zydus Life. The product was under litigation and Lupin has launched it now in 25 mg strength. So yes, interesting. And they expect to launch a 50 mg strength as well. Today we're seeing the stock is buzzing away in trade. Alara's Lupin, they've given a target for Lupin which is that could be at around overall the market that they believe over there is around 500 million. That is an opportunity for Lupin over there. And they believe that this could generate an annual sales run rate of around $50 million. That's 420 crore rupees from this. So yes, interesting to watch out for there. We also had a note that came in from Nomura as well. They said they're also maintaining a buy target price of 1,949 rupees. So yes, interesting to watch out for over there.
Alright, so that's Lupin for you, but let's talk about National Fertilizers. In that particular counter, last time I checked, was trading higher by about 4% or so, holding on to good gains coming in for that stock. The reason why National Fertilizer is buzzing is because it has been granted the Navratna status, implying that they have enhanced financial autonomy and they have the ability to invest up to 1,000 crore rupees without seeking government's approval. So on back of this prestigious Navratna status that it has acquired from the government, you can see National Fertilizer still holding on to very strong gains of approximately 4.9% as we speak, Vinny.
Absolutely, that's what we should keep an eye out on as well. Also, let's just mark the numbers that are flashing on the screen as well. Rajratan Global Wires, that's a stock we're keeping an eye out on. This revenues have seen a sharp decline of around 18% is what we could see. The stock is fallen by around 2%. A slight bit of a spike that in terms of a decline that we've seen. Profits have remained quite flattish. But yes, that's Rajratan Global Wires on the back of their numbers. EBITDA, operational performance, quite weak. Look at it, 34 crores only versus 106 crore last year. So that operationally seems like it's, been a bit of a weakness that we are seeing because margins also sharply have contracted. So that's Rajratan Global Wires for you all in focus on the back of its numbers as well, Sharon.
Apart from that, Vinny, but you also have RK Forgings that is in focus, isn't it?
Absolutely, that's an important one because just last week that we heard that they had made there was a tie-up that was done, the stock had seen a run-up. Now today it's a different story that happened because what they are saying is that, after this order they received from this large electric passenger vehicle, the producer that was last week, that has actually been put on hold. That's the main reason, that we saw a run-up coming in the stocks. That given very positive commentary on that. And now it's been put on hold. So yes, we're watching out for why is it put on hold. There's nothing as a reason that's given so far. But it's on hold. So maybe some jitteriness that we're seeing because of that as well. And Ramakrishna Forging is down almost 3.2% as of now. Yes, off the day's lowest point. I think it started at the lowest point of the day, but then, bit of a recovery, but still down 3.2% today.
All right, so that is RK Forgings for you. On back of that negative news, the stock is down about 3% or so, but that was the last stock that we discussed on this edition of Market Fatafat. Thank you so much, actually, Sameet, Aditya, as well as Ankita and Ansh for joining us on the show to talk about stocks that are buzzing. But with that, it's a goodbye from Vinny, myself, and the team that put the show together. But before we wind down, here are what Kenneth and Rade had to say about the IT sector and in particular about the broader markets.
You saw a significant amount of hiring by a lot of these companies post-COVID in the expectation that all this order book would actually ramp up. And to an extent, I'm relatively, pleased to see the fact that these numbers haven't ramped up and now they are actually cutting headcounts. Okay, so the growth in headcount is not as much as it has been in the past. So whenever these orders actually ramp through, you'll have two things actually playing out. You'll see costs going steady, and then revenues actually coming back again. Now, whether it is going to happen in this year or whether it's going to happen in next year or even probably in 2027, that will happen. I can't time it, but the numbers are good. The balance sheets are strong. It's a fairly mature business, so you wouldn't expect any of these companies to hit it out of the park. And if I go back to past track record, all of these or most of these companies have doubled every once in 5 years. I don't see that trend changing anything very significantly from what we've seen in the past. So yes, to that extent, I believe most of them it will happen because we are the largest. We are the largest in the world as far as IT outsourcing is concerned. So that's going to remain a static a static phase, should I say? And the growth you will see it come in a year, maybe two. Most of my life watching this space, whether it's small caps or mid caps, and I've seen this come up in the past. So I think you got to tread careful when you head into these head into allocating money into all of these companies. And to be fair, the mortality risk in this in this category of businesses, it is high. It is extremely high. So buying at high valuations is not something that I subscribe to. So when you are in this industry or when you're in this category of companies, you have to be very cognizant of the fact that you got to buy it with a very high margin of safety, and you need to know what you do, right? So this is a place that I choose to be in because this is essentially where you get the $100 million companies becoming $1 billion companies, and there are enough of minefields out there. So valuations today on a broad basis is high. I would like to see this category of companies actually consolidate. I would expect this year to be quiet for this segment of the entire market. Till now, it hasn't. It's been reasonably quiet still. And in 2025, I do see a large part of these industries these small companies from this segment of the market getting back to profitability, which is reasonably large.
If you like this video, then like, share and subscribe to ET Now.